I think my
And we're live. Say it, Wade. Go ahead and say it. Tell us what you really
we're
think, sir.
live here, dollars and cents, where we'll make sense of your dollars.
I'm doing my part here in making sure that I share this bad boy to my main page. Look at us, looking all nice. My part here in making sure that good afternoon, everyone. I hope your Thursday is going all right so far. Welcome to Dollars and Cents. Welcome to our podcast where we try to talk to you about different things relating to finances in the community, Black community, that is. And we talk to individuals who can really help us to understand certain things, help you to understand certain things, and also bring some insight as far as how we can better ourselves when it comes to money and all things finances. We have here my usual guest, let me start with the lady first, Keisha Johnson. All right. Welcome, ma'am. How are you doing?
Good. Having a good week so far.
What's it like being a road to success agent? Tell me, what's it like?
It's good. I purposely choose that name, Road to Success. My logo also has a road on it because that's truly what it is. Life is a journey. And so I'm happy to be a part of that journey with each of my clients and with regards to getting them into their home.
All right. And she is on social media. You can check her on Instagram. You can check her on Facebook. And you're on YouTube too?
Yes, YouTube. Eye on Mortgage. YouTube.
Okay.
Yes.
Look at you. And then we have Mr. Wade. What's going on, sir? He's chilling in his backyard right now.
On his deck.
Yeah. Show us the success. And the camera. Oh my goodness.
Whatever.
You're good.
I can show you the view. It's the view that I have.
See, we're not just bringing financial information here. We're living it as well. We're trying to live it as best as we can. We want to model it. And of course, we have our guest. So this is a repeat guest. This is a guest from last year. This is part 2. Yes, it is. It is part 2. Man, she really talked to us about a whole lot of things. Miss Billie-Jane Bolton-Rojo.
Not Billie-Jane. Billie-Jane.
Yes.
You got it.
How I know you're busy. How are you doing, ma'am? You're doing well?
I am. I'm grateful. I mean, we're coming to the end of, I think we're starting to come out of this COVID thing. Things have opened up for us up here. So I'm excited about that. I mean, school year is drawing to an end. Mm-hmm. I had no expectation that kids were going back to school. I know some people were really disappointed about that, but yeah, I had no expectation they were going back. I just wanted to finish off the year. Right. So I'm excited about that.
Back in the classroom?
Yeah, they're not going back into the classroom. I guess some people thought they were. I really didn't think kids were going to be going back into the classroom.
I wouldn't think so either.
Yeah.
At this point, I mean,
I know, but
people were pushing for it, but
yeah. But they made the late announcement that the kids are staying virtual, and people could even opt for it back into the fall. So yeah, but we're coming to the end of another school year. I have a graduating student, which is the things that we were talking about last week. That was that I was excited about, but I'm also in the thick of the journey because she's graduating. It's a bit of a bummer for her because they don't have all of the the graduation graduation ceremony and all of that kind of stuff. But still, we need to be grateful for the little victories and that, she has made it across. So no, we're good. We're good. I'm excited to be talking some more today and hanging out with you guys and admiring Wade's desk his deck and KP out there in Florida, making us jealous.
I was contemplating grabbing one of my East Indian mangoes, but I said,
"Oh my gosh, don't do it! Thank you."
I can see it. I can see it from where I'm sitting. I just got to keep.
Wade just went off camera. He's like, "I'm not even interested." Look at that, and it's so good to see you again, Keisha girl. I love hanging out with you.
Yes, it's wonderful. Same.
Yes.
So Miss Billie-Jane, of course, I told you all last week, is the owner and operator of PCAL Financial Group, right? She spoke to us about RESPs last week, and you went to the definition, and then you gave us all these wonderful tidbits.
Yes.
The part that's still ringing in my head is, just start where you're at, guys. Just start. I love that.
Yeah. And I think that really is the case for everything, isn't it?
Yeah.
Right? Even home ownership. Like if there's something you want to do, you just have to start. Start. If you have that vision, you want to own a home, just start saving, start asking questions, start envisioning it, start making, start finding out what you need to do to make it happen. Don't worry that you don't have it today, but start where you are. So I think that's a message that can apply to everyone in every part of life, right?
I think you should make an acronym out of START. 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 Yes.
Hey, girl, yeah. I'm gonna grab that. I gotta figure out how to use that. Yes.
So, is there any other piece of information you want to? Because we're gonna transition into.
Yes.
And I said I wrote it down when we were in the room. You stopped at insurance, and you're gonna make a connection as it relates to us in the Black community.
Yes.
You were leaning towards us taking care of ourselves. You mentioned marijuana, but just before you go into all these things on the insurance side, any other piece that you wanted to drop on us before?
Related to like what we were talking about before.
Yeah.
I think that we were good in talking about, I think I covered off all of the key things that I wanted to mention to families. I love, KP, how you mentioned that message to start, because that is what I always want to leave people with. Just start where you are. And even when you think you don't have anything, okay, and you don't have the resources, you don't have the income, start at least with the free government money, okay? Because the government will start you off $500 to start and then top up from there. Look at Wade. He went to go get his mango. Look at that, eh?
How did that get in the picture?
He wasn't going to let you beat him to it, okay? So.
Oh, my goodness.
Thank you for the West Indian stores, eh? Oh, yeah.
Right. It works. But yeah, no, my whole thing is really about how we look at the next generation and how we equip our next generation for success. And that, all of the things that I talk about, we have to be patient. We have to start though, but we have to be patient to see the fruit. And, which then leads us into our conversation today. But even just with the RESP, if I could just share one thing, and I don't know if I really stressed it enough. Yeah, I was thinking about it and I was like reflecting on the fact that my daughter's graduating and now she's going to post-secondary herself, and just thinking about and really urging people to be patient. Some things take generations. And my own story is that my dad started an RESP for me. It only covered 25% of my education. Okay. Mm-hmm. So it was a start. It was a great start. And he worked hard to make that happen because he only had 6 years to do it. So he squirreled away, and that was 25% of my education. He didn't even teach me about RESPs. All he told me is that there's some money for me and I needed to use it to go to school. Like I had to go to school because he was afraid he would lose some of his money, which is something we talked about last time. So that was all I knew. I didn't understand how it worked. I didn't know anything about this program, but because he did that and told me he did that. As soon as I had my daughter, I called the RESP company to say, I need to start an RESP for my daughter. My dad, to this day, he had no idea that I had done that. right? So it wasn't until now my daughter's, in grade 12 and we're preparing for the next stage. And he suddenly started to think, how are things for school for her? Is she going to have money? And I'm like, no, we got this. She's good. So 100% of her education is covered. So we went from one generation, 25.
Talk about moving from
next generation, 100%. And my goal, when I got that 25%, I was like he planted the seed because he made that available. All I was thinking is this was going to happen. So how am I going to make this happen? I'm going to get OSAP. I'm going to apply for scholarships. I'm going to work every summer. I hustled to make it happen so that I could have my education funded. Okay.
Right.
My daughter now, what is she thinking? She's not thinking I need money to pay for school. She's thinking, Mommy, can I get a scholarship? How can I get scholarships enough that I don't have to use that money and I could use that as a down payment for some property?
Wow.
See how the thinking just elevated because of one decision that he made that he didn't even educate me on, really. Okay. That decision that he made, now his granddaughter is talking about taking the land.
Mm-hmm.
So these are the things that I really want, but it took time. I mean, we're talking not the next generation, it was the generation. I mean, yes, I'm a homeowner, which is great, but the next generation is thinking how she can do that while she's even a student, thinking, can I get student property and have students help pay for my mortgage? Do you know what I mean? Like already that kind of thinking. Okay. So this is the possibilities, but it takes time. It takes patience, and we have to start.
Don't just let that pass. You said, should I get student property? Don't just let that slide by. You said
so she's, it's been a conversation. Now, the difference too, though, is that I have been talking a lot more about it. I have been planting seeds along the way. Right. Yeah. But, I'm like, hey, why can't you get, some property that's, let's say, close to school, not in your first year. First year, enjoy the experience of being in school, but maybe second year. Right. Yeah. Why not? You want to go off campus, get a property. And you can have other students live there with you. So planting those seeds as opportunities and start thinking that from now. And now her whole horizon is different. Her she doesn't have the same kind of, I want to say, limited beliefs, that I may have come out with, So yeah, it's just a whole thing. And that's why I really want to impress the power of every single decision that we make, that it's a legacy decision that makes significant impact. You may not see it now. You may not see it next generation, but 2 generations, you might see some real fruit, right? So yeah, that's what I want to leave, which takes us into insurance, which is another, and the mango.
no, you mentioned fruit, so I just had to throw my fruit.
Fruit! We got to do the mango.
Fruit of your labor. No.
So that's what brings us. So that, that is another, and insurance is so good. I would love to talk about, again, next generation thinking as it relates to insurance. And, again, that was another lesson that my dad silently talked to me about, in a way, right? He didn't teach. Go ahead.
Question before you move on. In terms of, I know that, we're talking to, for the most part, adults and individuals who are in the position to make decisions that will affect people that they're taking care of.
Yes.
What about young people who might be catching this program or something like that? Would you encourage them to talk to their parents about making a move, or talking to their parents about setting something up, or is it too young, or is this not something that?
You know what? I think it is so great for kids to get informed and actually have conversations with parents. Some of it can be sort of bringing down some of, myths that may be there that maybe our preceding generation may have, Right. I think it's so great. And you know what? I even talk on a platform, Kittynomics. Keisha did as well, Kittynomics, and it's really educating the kiddies about things. And it's great. I think it's great to start to raise awareness, for, let's say, an RESP. I mean, a child can't set it up, but letting their parents know, Mom, did you know that there's this program that's out there, starts to plant seeds. So I think it's great for kids of all ages to start to get exposed to what kind of opportunities there are. And it's great when there are platforms like Kittynomics who focus specifically on that kind of thing. So I'm absolutely an advocate. So the information that, sharing on this platform, it'd be great. Youth are tapping into it and asking questions questions. And, I can tell you, my dad was very, very conservative, and he didn't buy a house until I told him to. So that was when I came out of university, and, the opportunity came, and it was me who pushed him. So, for you youth, for you young adults out there, I do encourage you to speak to your parents. And I know he was very trepidatious about it, but I know today, as he's watched that property value increase, he's happy. He's happy that he listened to his young daughter those years ago.
I love my daughter even more.
Right?
And for those who are thinking of buying houses, you need to contact RTS Financial.
There you go. There you go. I even want to get RTS, consultants to come and talk to my kids. When I say my kids, because I love to offer more than just, helping their parents to pay for their kids' education. I want kids to know that there are opportunities for them to fill the gap. And so I'm always looking for ways, what more I can offer kids. And I would love to have RTS come in and chat with the kids and plant the seeds of home ownership, but beware, let's learn how we can get credit under control and things like that. So, yeah.
I actually did a presentation with Tropicana Youth on Tuesday, and it was really good. I also came through Tropicana, which was back then known as ACE. I got my first job through that program, and so when I do that presentation with them, I always say, if someone like me came into this program when I was sitting in your seat, a lot of the bumps in the road, that I came upon, I probably would have avoided, most of them when it comes to credit. And so that's the presentation that I did. And one of them actually reached out to me. I said, I'm on social media, all that stuff. Feel free to always reach out because they have more follow-up questions. And overall, it was a good presentation. They loved it. They had questions during, because, even if it be one, it's about positioning them from early out. I know as a young person going to Seneca College, had no job, but those credit card booths were lined up. Waiting, and I signed away,
and they knew what they were doing.
They know. They know, and that's the heartbreaking thing about it. Listen, we were all suckered into it. When I got on my campus as well, they were all lined up there with the credit card that has the university campus picture on the credit card, because this is a university credit card. And you're like, oh, I've got all this money, not realizing that you are trading your tomorrow for this spending today. And you don't realize that. And what that is doing, good. I can't wait to have this conversation with the kids. So thank you so much, Keisha, for doing that. So it's good. It's good for kids to know.
We're talking about canceling out insurance. And, when it comes to our community, that's like a dirty word.
Is it?
Yeah. Why would we be throwing our money away, or just the lack of information, and how to who to talk to, how to even get it,
they just want to rip you off. They don't want to pay.
That's right. They don't want to pay. I've heard that, you're just throwing money away. And I've also heard that, sort of like when you if you're speaking of death, then you're bringing it into your, I've heard that. Yeah. I don't talk about those things because I don't want to bring that into my reality.
They usually fall knock on wood. Yeah.
Actually, it took me a while, I will say, to get life insurance. I thought, just my minute mindset at the time was, when I get it, the minute I get it, that's when something's going to happen. So I delayed getting life insurance until I kid you not, there was a little bit of a fear in me, I don't know why, but praise God, I definitely did finally get life insurance, and because it's not about the money, it's about where are you leaving your family, when that happens, right?
Do you know what? There are people who are like, listen, I have to fend for myself, you fend for yourself. There are people who make that deliberate decision, right? That they're like, next generation, you figure it out. Okay. So, but it's a lot about the beliefs that we have, right?
Yes.
The beliefs that people have told us, the beliefs that we learn from what we see, so I get it. So it's good. It's good to have the conversation. It's good to have the conversation.
For me, it was I just didn't know. Granted, my mom got into it a little bit later on to sort of set some things up for us. But it was just never a conversation I had in my house. I didn't know anything about it. When I got a little bit older, I felt, man, even little things like going to go open up a bank account for me, it was terrifying, right? Honestly, no lie, it was just terrifying because there were just certain things that didn't happen early, right? But later on, now when you're trying to figure this world out, you have to overcome that fear and find the right person, the right kind, so that the person can have that conversation with you.
Yes.
So talk to us now. What do you want to
let's have some education about insurance. So you know what? Listen, you aren't alone. KP, I'm even telling you, like, just as I said, my dad started an RSP for me. All I knew is that he started this RSP for me. I didn't know what it meant. I knew that there was some money, but I didn't know how it worked. Well, I found out that my dad got an insurance policy for me. Now, he never told me that until he said, okay, you are finished school now. You have a job now. You're paying the premiums on this thing.
Yes.
That's how I found out I had an insurance policy. And I'm like, oh, okay. I'll take it on. It was $230 a year. It wasn't a large policy. It was a small little permanent policy, but I didn't even know what that meant. I'm like, okay, whatever. I have this insurance thing, whatever this means, something small. And so that was my introduction to insurance. So like the same situation where I had, my daughter, and I was the easiest sale ever. Call the company, come send somebody. When that time when my husband and I got married, and you know what? It was, and because we had our daughter like the year, after we got married. So within that year, we're doing all of this thing. And I was like, okay, we need to get some insurance because I knew of this thing called insurance. My husband had no idea what insurance was, didn't have insurance. So we got all of that set up. And in that conversation, the insurance agent also planted the seed about insurance for kids. And so that's when I was like, okay, so my daughter at, how old was she? She was less than a year. We got an insurance policy for her as well. Now, the thing is, I did that and I had no clue. I knew it's insurance, but I still didn't understand what the heck we were doing. I just know we're supposed to do this thing. Right. And somebody coming from, and listen, don't feel bad, KP, when you say you went into the bank with trepidation about opening a bank account. Listen, I had an engineering degree. And I didn't understand what he was telling me about this insurance thing. So, and that's having the agent come. So it's really, getting in front of people who really will focus on education. And you guys are so amazing in that you are doing this and creating this platform to create education. I just like to look, what insurance, what it really started out as? It was really, think about it as a huge reserve fund, okay? But for social purposes. Egypt had insurance. Ancient Egypt. Why? So that everyone can send their loved ones off in a dignified way, because within their faith, that was the whole purpose of the pyramids, create these catacombs. So then their elite get, they're mummified, they bring all of their wealth in there to help them to transition to the next world. So everyone feels that they should have the dignity for, that kind of thing, not to that level, but have a dignified transition. So everyone would pool their resources in this little society to pool their resources, which I'd rather call a reserve fund than an emergency fund, but it was really a community reserve fund. And so if anybody in the community needed it, they could tap into this money so they can send their loved one off, right? But it wasn't that sophisticated at that time. They didn't look to say, okay, you are 80 years old. Okay, they probably didn't live to that age at that point. Let's say you are 50 years old. You're probably going to come looking for this money tomorrow, okay? So you're going to have to put more money into this pot than this young person here. They weren't sophisticated like that. It took time where they developed things like actuarial sciences, where they can assess what is the likelihood that you're going to tap into this pool ahead of time. So that's why you see things like when people ask for insurance, they want to have an idea. What is the likelihood of you tapping into this money? So how old are you? What is your sex? Are you a smoker? What's your health profile? They want to know what are the chances that you might need this money ahead of time. But at the time, they weren't sophisticated like that. So when, as I said, it started off just like that. Let's pull our money together in case somebody needs it. And then it expanded beyond that into the trades. So the merchants, they would pull their money together in case any of the member merchants lost their merchandise and travel, right? So they could tap into that. Then it went on into the naval trades. Okay. And so when people are transporting cargo by sea, which is treacherous, and they would lose their cargo, they'd have insurance to make people whole so they don't lose their whole livelihood. Guess what? Slave trade was part of that. And there was insurance for the transportation of people through the slave trade. And that's actually, and I planted that seed at our last talk, that was actually the beginning of the abolition of slavery, because one of the owners of a slave ship downed his ship and thought he could go to the insurance companies to make a claim. And that started the whole dialogue about cargo. And what is cargo?
Okay.
Lives. And then that started the conversation, and things started to move towards abolition of slavery. So that was England, and England was big. Lots of insurance. Okay. So that's really, if you just think about it like that, just a simple premise like that, what is insurance? It's just really us tapping into a pool of money in case we need it. And we have insurance for so many different things. We think about insurance for cars, for houses, but the most important one is the most important resource we have in this world, which is human life. Okay. Not that we can actually quantify it, dollars and cents. We are worth much more than any amount of money. But if we have to try and quantify it, that's where insurance can help to make a family whole, at least financially whole, should something happen ahead of time. So that's really what it is. And so an insurance company wants to know, how much should you tap into this pool? How much should you be contributing? And that's the premium they're going to charge. And so the premium for you will be the difference from the premium for me, because they want to understand the risk that they're going to have to pay out of this pool.
Right.
This money is in the pool, right? And you know what? Quite frankly, when it comes to life insurance, only 5%, they say, of the money is sort of pulled out prematurely, like ahead of when they would think. The rest of it is sitting there because they don't just leave the money there. They invest it.
Of course.
Not that
this
too.
money is growing. This money is growing.
Yeah.
You told us this at the bank last week, Now you're telling what you're doing to us, Billy.
So this is the thing. So there are different types of insurance.
Yeah.
You can get term insurance, which is like temporary insurance, where you've got temporary access to this pool, and you basically rent your access to this pool if you need it. Okay. And so it's cheap. It's so much cheaper to rent, as we know, than to buy. Okay. Or you can buy some of this money in the pool and take advantage of the fact that it's growing, because remember, the insurance companies are growing the money. Okay. And they're always in the business. Listen, insurance companies want to make money too. Okay.
Right,
so they're in the business of making money. So that's when you start talking things like permanent insurance, is you being able to tap into this pool, and it's your money for life. So you're going to get a payout, but you get to participate also in the growth. You can let the insurance company invest it, decide how much of the premium they're going to invest for you and how they're going to invest it. And you don't know exactly what the investment decisions are because they've got professionals doing that, or that we call whole life. Or you can choose to make the decisions yourself. You decide how much you want to invest. You make the decisions yourself. And that's more like a universal life. So you have more flexibility. However, I have to say, for me, I go with whole life, because insurance companies have paid a dividend year over year over year for at least a century for some companies. Okay. So that's the thing. When you take it on yourself, you're going to be hanging on to, see what's going on with the markets and make sure that you are doing well, because you've tied that with your insurance. And if there isn't enough money, there's some more complexities in it, but if there isn't enough money, because let's say you haven't performed as well as expected, your actual insurance policy can be at risk. So that's the thing to keep in mind with Universal. You really need to be diligent about your choices and monitoring it. Right. So, but yeah, if you just think about it from that standpoint, hey, you are basically buying some cash. Okay, you're buying some cash, whether you're buying it or you're tapping into it for a period of time, or you're buying it for life. That's really what it is. Insurance is just really a pot of cash that you're getting access to, right? And the cost of buying this cash is your premium.
All right. Go ahead, Keisha.
Sorry, is there a type of insurance where you are able to tap into it?
Absolutely. So when you get into the permanent insurance, right? So no matter what, when you think about, so we're talking life insurance. So life insurance has a death benefit. So the whole idea about life insurance is it gets paid out at death. Okay. Right. As opposed to other types of insurance that have a living benefit so that we can continue to live our lifestyles when, the unexpected happens. So that's when you hear terms like critical illness and disability insurance and long-term care. Those are things that we get a benefit while we are living. But life insurance really is designed for a death benefit that gets paid out at death. However, when you have things like a universal policy or a whole life policy, you can actually tap into those funds ahead of time. I like to look at it as really you're borrowing from the person who you would have received it from. You can think about it simply like that. This should have gone to your child. So you're borrowing, you're tapping into some of that money that would have gone to your child ahead of time. So if you do that from the insurance company, there's going to be interest to make that whole. Hence, they work for money. So there's going to be a premium on that, right? So the point is that just think about it simply that you got to make it whole because that money would have been growing for your child, right?
Right.
Would have been the recipient. So you can tap into it ahead of time. You call that a cash value that you can tap into it ahead of time. So you can actually live off of your cash value. You don't have to pay it back. If you don't pay it back, then the interest is accumulating. And when the policy actually pays out, they deduct what you've taken out ahead of time. If you do something like that, you would want to structure the death benefit to also be growing over time. There are different ways you can structure it. For my families, I always structure it that you're getting a permanent policy. So you get an investment that's growing. As that investment is growing and it's paying out a dividend, you're buying more insurance with that dividend. So the death benefit is growing with time. But of course, you can tap into some of that ahead of time. You can go to the insurance company. And that's why I love to do this for kids, because you can go to the insurance company to access the money. And that means your kids will have access to capital. The insurance company generally won't say no. Okay. I mean, there could be some odd scenarios, but generally it is so simple. Like for me, listen, I can tell you I've done it. Okay. Through my own policy. I've called I need a little bit of money. Okay. Can you send a few thousand from this policy? And within a few business days, they sent that money to me. Okay. And now I can choose to pay some of it back, or I can leave it and it'll accumulate interest, as I said, which would be deducted from the ultimate death benefit. Okay. So your kids, when we do this for kids, when they're young and they're healthy. So remember, my insurance premium, they're calculating it based on the likelihood that I might need it. Okay. For a baby, very low likelihood that they would need it prematurely because they're young. They're healthy, okay? So you can get very low premium, okay, for that same amount of insurance. And then because they've got decades on us, they really can ride the weight of compounding as the insurance company is investing, and this is compounding over time. So their insurance policy will really grow by the time it transitions to whom? Your grandchildren. So remember, we're going generation by generation. Okay. So that's the real power. So your kids also, if they need to tap into money, they can go, hey, Mr. Insurance Company, can I tap into some of this insurance policy ahead of time? Now, they won't give them all of the money. Okay. It'll be up to 90%. They always want to leave a cushion. Okay. But they can tap into up to 90% of that money ahead of time to do what? Maybe if they've got a fairly large policy, maybe they want to start business. They want to buy property. Some people use it to help get married, buy a car. I don't really advocate for buying things that aren't really assets. Okay. But they can tap into money to do those kind of things. You can go to the insurance company and they'll give it, but you cannot negotiate with the insurance company on the interest rate. They're like, sorry, take it or leave it.
Good. When I say transition, I just want the question here that I have. when you talk things like premiums, dividend, death benefit, life insurance, and all these,
Yes.
is it a person like you that individuals should come to, or rather than trying to navigate, and like as we spoke about the education piece, like somebody is trying to educate you, but they're also trying to land a sale, right, or to
Yes.
get a client.
Listen, yeah.
How do you navigate all of it so that you get it right the first time?
That is such a good question. It is a lot of information to swim through and wade through yourself, because professionals, they get the education to be able to help you define what's important to you. But no matter what, at least the way that I like to do things, it's education first. I actually spend quite a bit of time with my clients. Like, our first session is I just teach them, what is insurance? What is life insurance? What are the living benefits? Like, we talk nothing except I'm teaching you, because ultimately I want my clients to make their own choices. I'm just your guide, right?
In that conversation, do they bring up the name of a company that they are looking into? Do they get that personal with you?
Yeah, okay. So for when a client decides to work with me, it's just generic. Now, once they understand what it is they want, they can be telling, you know what, I've already looked in this company. I'm a broker. So there are different types of people who can serve you. Right. There's brokers who have access to multiple companies, and then there are agents that may be just with one particular company. Okay. Right. So as a broker, I can look at the landscape based on what I understand about the clients, what companies would probably be best to work, but I always show them a variety. And a client may come already to the table, I'm already looking into this. So then I can also look into that. But with the education, they now can understand what type of insurance they want and what they need, how much. We go through that all, like how much they need, because it's so hard to also figure out how much insurance you need. Again, so that's so good. What you mentioned in terms of, having the information and understanding terms and all of that. I think it really does serve people when they are with somebody who will really seek to educate. Because as I said, I came with an engineering degree, sat down at the table with the insurance agent, and I didn't really understand a whole lot, So I think education is important. But I find, and I don't know if you guys have been seeing, but there's a huge shift to a lot of self-serve. Do things yourself, like the Wealth Simple and all of, do things yourself. You can figure it out. You don't need an agent or a broker. And I'm sure there are sort of insurance solutions that, are probably coming, if they're not already out, that are similar, in that vein. My thing, I think there's so much value with having an expert work with you, and, I agree. Yeah. And I'm one to believe that, we should be willing to pay for the service. Listen, like anything, who wants to work for free? Like, it's not just like we are giving our best to you. So we should be compensated, So I am not afraid to pay somebody who is good at what they do, who's serving me with the best of their ability. Absolutely. So we need to dispel this whole thing about not wanting to pay for service, but get someone who can help you weed through the mess. And that's what they're trained to do. And, focus on your lane and live life, but find the right partner, right? Find the right partner who will work best for your household, right? So
I can't go on YouTube and look it up and figure it out.
Well, you can't, listen, there's so much information, and there are people who go and figure out, they can do a lot on their own. I'm not discounting that. There is a lot of information out there, and, with the time and the focus and the diligence, you can work through and figure these things out and save yourself money. Absolutely. Because you're doing the work yourself. So guess what? You're paying yourself. Okay. Or, if you want to shortcut that because there are other things that are more of priority to you in your life, and everyone's life is different. For me, I am looking for the day when I can call someone to come and clean up this house. Okay. I would rather pay someone to do it than pay myself to do it in my time. All right. But it's the same, right? But it's the same idea. I would love for someone to come and cook food. Okay. I am working hard to get to that point. All right. But it's the same idea. What is valuable to you in terms of your time, your effort, your knowledge, your expertise, and you also want to get things right. So that's the thing. But you can definitely research yourself, but know that you are paying yourself because you're investing your time and your effort. And that is, for each person is different. There are people people who would rather do that work themselves. So there is a lot of information, but you just need to weed through it, right? And then there are people like you who are putting this awesome information out there to give people at least seeds of information. So if they want to self-serve, they at least have some seeds of information and they can continue to dig down and get some more, ask more questions, right? So this, this is really awesome. But yeah, no, insurance is really, really powerful. And when you think about it, especially from the context of kids, giving them access to one, you're giving them access to an insurance policy while they're young and healthy, and it costs a fraction of what you would have to pay.
Okay, that's what I was, where you're saying it, you're repeating it, so that's good. I wanted to ask you, when you say it costs a fraction, like what does that number look like?
Okay, let me just
be in it, especially for black folks. Two questions actually. That we like dealing with money, right?
Yes.
Is it a yearly thing? Is it a monthly thing?
Okay.
How much is it? What's a nice number? Generally speaking, and also the other part of that question is, what kind for children? What could we?
For children, only permanent. So, but let's take each of those, because I actually have run some recent numbers. Let's say for me, okay, now I'll be honest.
Yeah.
I'm a 47-year-old woman, okay? So, 47-year-old non-smoking woman. If I decided to get a small $25,000 policy, okay? And I say small because, permanent insurance is more expensive. It's the same idea. Do you want to rent or do you want to buy, right? If you're buying a house, you know that you're investing a lot more than if you're just renting, right?
Okay.
Over the long haul, it's not the best thing. But, when you're thinking sort of cash flow. So, when you think about permanent insurance, the basic thing that you think of is permanent insurance is there for life.
Okay.
Term insurance, most companies, now it varies by company, but most companies will only give it to you till age 85.
Okay.
Now your premium will be a certain rate depending on how long it's locked in for. So you can say, and when I say locked in, it's more for the insurance company that they cannot change your rate within a period of time. Normally with car insurance, it's annual. Every year your premium changes, right? The same thing with life insurance. Every year your life insurance would change. However, they came up with having it stay the same for a term. So you could say, I want a 10-year term. Okay. So after 10 years, it's going to roll over for another 10 years for a higher premium because you're 10 years older. And then it'll roll over another 10 years until you get to age 85 when there's no more time. Okay. If you leave it, oh my gosh, when I talk, I've seen it 12,000 a year, 20,000 a year. When you're talking older age now, you're getting closer to the 85 mark. All right. It's ridiculous for someone to be able to pay that if they stay with a term policy that just keeps renewing. 10-year is cheaper than 20-year. Because 20-year, you're locked, because 10-year, they're locked in for 10 years. The insurance company says, we can't change your premium for 10 years. They'll take a chance for 10 years, right? But if they have to take a chance for 20 years, they want to get compensated for that chance. So it's going to be a little bit more expensive. And then they even have something like 30 years where it's going to be a bit more. There's some companies that even offer a 40-year term, okay?
What does a bit more look like? What would you say a bit more? What does a bit more look like?
Let's see. Let's say for a 10-year, I'm trying to think a scenario that I was looking at.
I'm like the typical dude from the black community, I'm
trying to think of I have a family who is let's say mid-40s, healthy young man.
Right.
Oh. Healthy guy, non-smoker. And I believe his 20-year was $170 a month. Now that was for almost $1 million of coverage. Okay. And I believe his 10-year, you know what? I'm going to let me see if I can actually look at it. Because of my memory, because it's good to sort of talk numbers. While I look at that, I will let you know when we talk about, let's say, a woman like me getting some permanent insurance, 25,000. What I was getting to is with term, it's for a period of time, but permanent, you have it for life.
Right.
So you always want to use permanent insurance for the things that are going to come down the pipe even after age 85. So if you were to transition at 86, you want to know that there's something that'll at least pay out your funeral costs, right? So that's why we say, let's start with at least 25,000 for a permanent policy, right? So for me, getting a permanent policy at my age, non-smoker, it would cost me about $85 to $90 a month for the company that I'm thinking of. Okay. Now to get that for an infant, and I'm going to stay with the female infant, to stay with the same sex. the infant would cost $33 a month. The same $25,000. Okay. Just so you can see. So that is, so over, because you're going to, and I would structure it. Ideally, I would structure it to pay it off, just like a house. We want to pay it off in 25 years. So for insurance, you can pay it off in 20 years. Some insurance companies say you can pay it off in 10 years or 15 years. But traditionally, you will see 20 years, pay it off in 20 years. Okay. Let me see here. I'm just pulling this up. So yes, I have $100 a month for $975,000 worth of insurance. Okay, this is for term 10 versus $172 a month for term 20. So you're paying 75% more. Okay, but over 20 years, you paid less than 10 years that rolled over another 10 years. Okay. Right. So those are the things that you sort of weigh out. But yeah, but in terms of like what I was talking about with a permanent, because you want to have permanent for those permanent needs and needs that would happen after age 85. Right. Okay. So, having insurance that'll pay off your funeral costs, having insurance that'll pay your final tax bill. Yeah. We owe CRA is the number one creditor. We owe them until the day we die. That last year, they're still come knocking. So we need to have money to pay that tax bill, or that money is not available. Our estate is not accessible to other people, right? So you want to make sure, I always encourage families to consider permanent insurance to pay that final tax bill if they can calculate that, especially since you guys are in the business of like teaching people about home ownership and stuff like that. If you have multiple properties, this is especially important, right? Because if you have the one property permanent residence, it's always treated differently than if you have multiple properties, right? Investment assets. So that's the thing to keep in mind. But yeah, if you can get that for your kids, as I said, you can get it for half, right? Less than half the premium, and you pay it off in 20 years. It's done. You could be like my dad, who's like, chick, you are out of school, you're working, you pay it now. So you're not even stuck paying it for 20 years. You just kick it off for them. So you lock them in at a good premium and they can continue it when they're on their feet, right? And it continues to grow, right? It continues to grow. So my daughter, I got a policy for her when, as I said, she was a baby, and I'm paying I'm paying $33 a month for hers. And we got that, she was under a year, and we got her statement when she was just before her 18th birthday. And that $25,000 policy is worth $100,000 now. Hey. And that's because of the dividends, buying more insurance over time. And so she can tap into some of that money ahead of time. She can go to the insurance company and ask them for it, or she can take her insurance policy and walk to the bank with it and say, hey, Mr. Banker, I've got collateral. Now, this would be Keisha's lane. This is where she can now like try and negotiate a better interest rate. Okay. So that's why you would do that, right? You go because you can negotiate a better interest, because you're like, I don't like that 6% you're charging me, insurance company. I would rather go and, find my own credit from the bank, but you want to have strong credit then, because now you are doing a credit application and they just have this insurance as collateral. There's no guarantee they'll give it to you, because if your credit sucks, they still may not want to give it to you, even if you've got the collateral, right? So, but that is another way that kids, or not kids, anyone can tap into the cash value within their permanent policy ahead of time. They can go to an institution that is willing to lend them money, and then they use that as collateral against the loan. If you were to transition before the loan's paid off, so you have a loan agreement, you got to pay you've got a repayment schedule, all that, you negotiate your interest rate. If you transition before the end of the term of your loan, then the bank would get paid out, or the institution would get paid out first, and then the balance would go to your whoever your survivors, who you've designated as your beneficiaries. But my whole point is that kids will have access to capital. They will always have access to capital, because we know, when we've been concerned about this as a community, that we've had barriers to accessing capital. Right. So this is one way that you're assuring that your children will have access to capital, and how they treat things will be a lot different, because you just getting an insurance policy is already an elevated thinking that you're going to start teaching your children. So they're going to make different decisions, right? And how to handle that, hopefully, but it gives them access to money.
So question, when you have the policy for the child, who's the beneficiary when
the parents. So initially, the parent would be the beneficiary, because if something were to happen, and we honestly, I don't look at children's policy if something happens to my child. No, I look at this as like an investment opportunity for my child, and locking in their insurability where they're young and healthy, and ensuring that my grandchildren, because I'm going to pass on my assets to my children, and I'd hope my children have insurance to pay off because I hope it has grown, and I hope there is a tax bill. And I say that because when there's a tax bill, it means you've made money. Okay. So I hope that they've got insurance to pay the tax bill so they can now pass it on to my grandchildren and continuing that on generations to come. Right. So, yes, exactly that legacy. But I'm sorry, Wade, what did you ask me though? I just suddenly had a brain fart.
The beneficiary.
So we don't really think about, as I said, for kids, you don't really think, oh, something's going to happen to my kids. Again, that thinking we were talking about, right? You're not thinking that. You're thinking about the opportunity that it's preparing for generations to come. However, in the younger years, right, when your child is young, well, if anything were to happen, you would receive it. So as a parent, you would designate yourself as the beneficiary. And then later on, you can give, and you don't have to, by the way, give the policy over to your kids. I have a client whose mom is not giving the policy to him. Okay. You are the owner. So as the owner, you make decisions about it. Okay. Yeah. There's a term when you're the policy owner, the policy holder, you own the policy. You're typically making the premiums, okay? The contract is between you and the insurance company, all right? So typically, you would hand over that policy to your child who would take over the ownership. And then at that point, your child would designate whoever the beneficiaries they want to designate on the policy. Okay. But know that you don't even have to. You've got like wealthy families that have all sorts of conditions under which a child is going to get money, and they're not going to release that policy to the child. Right. So there are things, to know that there are very sophisticated ways that you can use it. But yeah, good question. It would be the beneficiary, at least in the early years, would be the parents, because if anything should happen, then the parents would get the proceeds to help, for that transition. There's something else about ownership. I mentioned ownership, but there's something also you'd want to consider, especially if you have two parents, with a child, is to have the other parent, we call it a contingent owner. So if something were to happen to one parent, then another parent the surviving parent would own the policy. So then that policy can continue on. Because if that doesn't happen, then the policy ends up falling into an estate, and then you got to weed through the whole estate handling kind of thing. So as much as you can with insurance, try and clean up some of those, like make sure it's clear what your instructions are. You can do that as much as possible with insurance, just to make it simpler with handling the estate and the will and all that kind of stuff. And I'm hoping everyone has a will. That's something. Have a will. Listen, I am on my clients, and still, it is a constant conversation. Did you guys do the will yet? Do you have the will yet? We need to have a will in place. It is so messy when we don't.
That might be the next topic.
Next time, but that won't be me. You should get somebody, I mean, it would be great if you can get like somebody in tax, somebody like a lawyer to talk about that, because it is so messy when we don't have a will in place. All of this work that you're doing ahead of time, and then you don't have a will in place, is all for nothing.
You just leave the family to fight over it.
Yeah, and it is horrible.
You see it all the time. So messy. You see all the time in Hollywood or in entertainment industry. I'm just talking about how it affects all walks of life, right?
Listen,
right.
And you see when money comes into play,
listen. Gloves are off.
I'm telling you, make your instructions known. Make your instructions known. And as far as I'm concerned, from even seeing what I'm seeing, like my own family, when our family matriarch, my grandmother transitioned, I'm telling you, it gets messy. And I think that it's even better if we, as let's say the head of the family that is planning for, the next generation, it would be great if we have a space where we can actually communicate it out loud, what our instructions are, so people know and don't have to read it on paper and fight about the intentions of what was written, people questioning whether the person was really thinking right when they wrote it down, things like that. But that's a whole other conversation. But yeah, so I just really seeded you. There is so much more. I just seeded you guys with one legacy generating strategy with insurance in terms of getting insurance for your kids while they're young and healthy. And I say this because things happen over a teen's life. I can tell you with one company, they treat kids as non-smokers. Okay, of course, like, you know, generally.
Okay, on that, just because we have a couple minutes left.
Yeah.
You said
I know.
smokers. You mentioned marijuana last time.
I know.
Well, you just want to hear what we.
You're not letting me know before I talk about that.
I want to know.
You're going nowhere. All right. Like, listen. So I'll tell you about the smoker, and I'm going to bring in the marijuana with that. Okay.
Yeah.
So the insurance company looks at kids as non-smokers, right?
Right.
But when they get to age 18, some insurance companies will automatically flip them to smokers. Why? Look around you at some of these youth. They choose different lifestyles than we have tried to instill. Okay. As hard as we may, they may still choose to do other things. And so insurance companies know this kid might be a smoker. Okay.
Right.
So they do give you the opportunity ahead of time to indicate their smoker status. So let's say by the time they're age 16, they may communicate with you, is your child a smoker or non-smoker? And you can certify they're non-smoker. So continue the non-smoker rates. So know that, like, it's not something like you have no control over. You just have to recertify their smoker status, and then the non-smoker status will continue. However, if you say nothing, they're going to assume that they're now a smoker and start charging smoker rates, which leads into marijuana. Marijuana, it is legalized, at least here in Canada. And it's okay, actually, to smoke marijuana. You will still get, you know, I guess it varies on the company, right? But, you know, one company that I know that is quite conservative with their underwriting, they will still consider you a non-smoker if you are not smoking too much. And I think it's like more than 3 times. I think it's like more than 3 times a week. You know, you're still considered a non-smoker. But if you're smoking more than once daily, they may even decline you altogether. Now, if you want to do things like the oil, what is it? CBD oil and things like that.
Yeah.
Okay. Yeah. So there's a particular agent, there's a particular chemical that they're looking for, that they're concerned about. That's it. So if they find that, let's say in blood work, okay, if they find that, then they treat that a whole thing differently. Because you know what, marijuana, although we think it's not really a big deal, marijuana is quite addictive, right? They say 1 out of 3 people become addicted. So the underwriters are looking at it from that standpoint. And so the impact to health. Now for kids, and I mentioned this especially for parents who are looking at kids' policies, okay? If you haven't done so already. For kids, they look at teens with marijuana much differently. They are not likely to give you a policy. They may postpone a policy because the adverse effects to teens who are smoking marijuana are much greater because their minds are still developing. Okay, so they are a lot more strict about that. So I say this especially when we talk about kids' policies, because sometimes we're not starting a policy with a baby. It could be like my dad, who got a policy when I was 16. You know what I mean? So if you're dealing with youth, you need to be aware of that. And they, like insurance companies, you'd be surprised the information that they're able to find out. Okay. So don't try and lie. If they find you've misrepresented, you may never get a policy. And we don't want to be in that situation. So that's the thing. So that's the thing that I urge for, like, you know, to be aware of marijuana, everyone, and vaping. And this, again, I'm talking about youth especially, right? Vaping is considered a smoker. Right? Vaping is a no-no, okay? Vaping, marijuana as a teen, as I said, as an adult, 3 times a week, they'll say, okay, you know, you live in, still consider you non-smoker, right? But when it comes to teens, even if you're smoking once, okay, they do not look favorably on that at all, because, and we have to think about it, like, not just think about, oh, the insurance company wants to keep my money. Well, yeah, they're in the business of trying to make money grow. They do not want money coming out of the pool prematurely. So at the end of the day, essentially, we actually look at it more as our own health profile. When they're telling us they're not going to give the insurance, I know we feel like we're rejected, but at the same time, it is a wake-up call to take a look at our health, because ultimately they're telling us that our mortality rate is higher than the average. That is what should be of most concern. So things like marijuana usage, things like vaping, Smoking and stuff for kids, not helpful to their ability to get it. And insurance companies, they do, because you know, with car insurance, right? You know, when you have an accident or something like that, we're always concerned about, should I go report it? Because the next thing you know, it ends up somewhere and this other insurance company can see it. And now our car insurance premiums have gone up and all that stuff. Guess what? For life insurance, it's similar. When we submit our medical information, it goes into a central database that can be accessed. So even with kids, that information goes to a central database and it can be accessed by other insurance companies. So that's why I say, like, you know, don't lie. The information, you'd be surprised where it goes. You'd be surprised what they look at. So I know we're over time, but we were just talking a little bit about the insurance. There is so much. I've got a couple more strategies for multi-generational thinking. So, you know, I would be more than happy to share that another time. But I'm hoping I planted some good seeds and encouragement for, you know, look at the notes. I love it.
I don't know. I mean, is Billy? What are you saying to us, Billy? You know, we want to know.
The marijuana seed.
Yes. But ultimately, just think about you know what it really means. I know we kind of like get defensive about those things, but ultimately, 24th. What is it really meaning? It's our health.
24th is here. We can do a part 3.
Yeah.
Oh my goodness! For sure. We would have to do part 3 and part 4 because I'd want to break it up. You guys have good questions, man, and I talk too much. So
no. We can do a part 3. Yeah.
For sure.
But we'll sort that out off the air. But
yes.
Let's we got to wrap up now. So okay, folks. I hope you enjoyed the information. Billie-Jane was just dropping it as usual. She dropped it last week. She's dropping it this week.
And she's going to be dropping it next week.
Well, we're going to go offline and see,
there we go.
We just want to make sure, it's, you know, we don't want to back her in a corner. So, all right, we're going to sign off. Wade, Keisha, do your thing.
Oh, yes. Thank you so much. As you know, that's what we do. You know, we're bringing knowledge and opportunity to those in our community. That's what we're here for.
To help you make sense of your dollars.
Yes.
All right, folks. Thank you very much. See you next Thursday. All right.